What's going on, YouTube? Juan back here with another video. Today, I will be talking about what I look for each time I come into the markets. All right. Someone in the comments requested this question, and here is my delivery. Today, I did not take any single trades. It was Memorial Day. Today's Monday. Didn't think I'd see any high probabilities, but I will still do an analysis and tell you what I look for in the markets, judging from what price delivered today. Now, before I proceed with this answer, I want to clarify, although I do trade ICT concepts, and in my personal opinion, ICT concepts are an effective way to understand trading based on the algorithmic delivery of price. My own personal observations and explanations might differ in some alternatives to traditional retail trading. Okay. And any strategy and decisions I make going into my trading style are purely based on my own experience and my own success in the market. Okay. I believe trading can be subjective to each trader as we all perceive the market differently, even when majority of us might still find some common ground on the same trading strategies, right? So when I come into the markets, guys, the first thing I pay attention to is liquidity. Okay. Liquidity refers to areas on a chart where a large number of buyers or sell orders are concentrated, often at previous swing highs or previous swing lows. Okay. That means I want to look at the previous session swing highs because I trade the New York session. I'm looking at London's highs and lows and Asia highs and lows, which is the session before London. And lastly, I'm looking at previous day's highs or previous day's lows. Okay. Previous day's highs and previous day's lows they're important because they represent the highest or the lowest price reached in the previous day trading session, which makes it a key reference point for me to assess market strength and potential reversal zones. All right, guys. Here, if I go into the 1 minute time frame of what price did today, we opened at 9:30, right around here, right. So prior to market opening, I'm paying attention to right around here, 4 a.m. or right around here, since we already have swept London's highs, these New York session highs. Okay, I'm paying attention to the highest point price reached in the previous session. Okay, I'm paying attention to liquidity, which so well could be this high or this high, even though this high already got swept. That's why I'm marking this one. All right, as you guys all know, I am a reversals trader for the most part, so I wait for this key level liquidity areas of interest to be swept before I execute any positions. Okay. These key level liquidity areas I just mentioned act as a critical liquidity zone areas for me. It's basically where institutional orders hunt for orders to fuel the next move. All right. When I understood my edge of patiently waiting for this liquidity sweep confirmation, it truly provided me insight into market manipulation and high probability entry points. All right. What I personally noticed with my strategy is that reversals often occur after a liquidity sweep, such as the one you see right around here near your highs. Was once price swept it, we reversed. Okay. Once price sweeps liquidity, I look for a reversal in price action. The way I see it, price may have been temporarily beyond a key level to trigger stop losses and then return in the opposite direction. Okay. Now, some traders trade with the trend, right? You've heard that shit. The trend is your friend. You've heard that shit, right? I've heard that shit. We all heard that shit. And of course, I take that into consideration by looking at the higher time frames, right? And seeing if the overall trend of the market is bearish or bullish and all that good shit. But despite that observation, because I am a scalper, the overall trend of the market does not influence or change my entry on any reversal that I may see. The higher time frame confluence can be a great observation for like intraday traders and of course swing traders. But because I execute on the 1 to 5 minute time frame, right? I capitalize on quick price movements, and I am not scared to trade against the trend. All right, guys. Because even if we are in a bullish or we're in a bearish market, I still capitalize on temporary corrections, right? And short-term pullbacks within the overall trend. As a lower time frame trader, this temporary declines before the trend resumes is literally how I make money and how you can make money as well. Most traders yap about their trading strategy and they use very confusing terms. They overcomplicate the science behind it and just fucking overwhelm you with confusing shit. Well, I'm here to tell you this is how I make money. Okay, this is my simplified and basic market behavior that repeats, it works, and it makes me money. Simple as that. All right, guys. A day like today, we swept these liquidity around here, which are these New York highs at 820. right? We had already swept London already right around here. We also got previous day's highs. Obviously, price would have been volatile enough to sweep these highs. That would have also been a point of interest for me, right? But at this liquidity sweep, once we sweep these highs, you guys can clearly see that we changed the state of delivery and we reversed in this place down. Okay, exactly how I mentioned it. I didn't take this trade. Obviously, I'm saying this on hindsight, but I did like today. My edge still delivered pretty much. Got a card around 30 points around here, targeting this swing low around here or this swing low around here. Okay, so nice trade around here, right? I don't shoot for the fences. Okay, I don't trade for 3 to 4 hours a day. I simply wait for a liquidity sweep. I catch a reversal once all my entry signals align. Right, I target internal liquidity. Sometimes hold a run to an external draw, maybe apply my effective risk management practices, make the money, and then I move the fuck on with my day. All right. I advise you simply ignore the noise. Find something that sticks once you prove its effectiveness and you see results. Okay. Ignore other traders with their different styles, as this is a solo sport, right? Where you learn and adapt to price on your own preference and understanding. Okay. Never trade someone else's strategy. Instead, just learn from the principles to design a strategy that fits your own time frame, your own like risk tolerance, and your own screen time availability. Okay, that way you can create your own beliefs about the market, right? Learn through repetition, and with enough determination, you'll put the pieces together and understand the game. So again, liquidity is what I look for each time I come into the markets. Previous sessions, highs or lows, just this one's. So we swept it, we reversed. Previous sessions highs, London's highs, as well as Asia lows, London's highs, London's lows, Asia lows, and previous days highs, which are right around here, and previous days lows, which are right around here. In this case, Sunday's highs, Sunday's lows when we open. Okay. Liquidity is what I look for when I come into the market. I want to capitalize off a short move after we get that liquidity sweep, after we change the state of delivery and we present preferably an inverse fair value gap or any fair value gap. And I simply capitalize off that retracement. Simple as that. Okay. That's simple. Okay. Hope you guys enjoyed this video. Hope you guys got some insight into my thought process and improve your own objectives going into these charts. If you watch this till the end, like and subscribe. You would not only be showing me your support, but also helping me reach more traders that want to improve their trading performance and understand the skill set a bit better. Okay, guys, thank you guys for watching, and I'll see you guys in the next video. Peace.